Now I changed my mindset to say, look, I'm not trying to get their capital so we can close on the deal. We're offering a fantastic opportunity that
Exactly.
99.9% of people have never heard about and will never hear about. So it is truly life-changing.
Are you looking to achieve massive success in your life without dealing with costly investment nightmares? If yes, then this is the podcast for you. Here, we provide engineers and busy professionals all the secrets and strategies to create multiple streams of income, build generational wealth, and live a meaningful life by design. Here's your host, Ted Patel.
Welcome, Decoding Cashflow listeners. Today, I have Charlie Hardage. He's a co-founder of J&K Investment Groups, and he has been investing in real estate since 2017. He's focused on raising capital for multifamily properties and is partnered in over 1,000 doors across 6 properties. In 2022, last year, he left his job to become a full-time real estate investor. And before starting into real estate, Charlie worked in the corporate world for over 12 years in IT sales and have also served with US Army for about 5 years. Thank you, Charlie, for your service. So to start with, Charlie, if you can give a little bit more background about yourself, and then how did you get started into real estate?
Yeah. Well, hey, thanks for having me on. It's a pleasure to be here and share my story. Before we started recording, you mentioned you could talk about real estate, very passionate about real estate. Yeah. I'm the exact same way, Ted. I mean, I could talk about it forever, but I was not always that way. I grew up in Dallas, Texas. I live in Nashville now. When I was probably 10 or 11, had a really good, my best friend's dad actually had his own business, and he was always around. Whereas my dad and most dads I knew, and parents in general, were working, right? And so, you go to daycare and get picked up at 5:30, have dinner and talk and go to bed. But his dad was always around, and I was like, how the heck is he doing that? Because that's not something you really learn in books or school or anything. And so he still to this day, 30 something years later, still has businesses. Like, that's just what he does. He has businesses, and he rarely ever worked for anyone, from his adult life on. He worked only for himself. So, Ted, I think that really started, there's something else out there besides just going to school and just being an employee. And fast forward, I went to school. I was an employee. I worked for a few household names, but did really well. I just was not passionate about it. At that point, I was about 25 years old. I joined the Army. I went in. I was there for, I wanted to make it a career. I wanted to put in 20 years in the military. It's 20 years and you can retire and you actually get a pension. And on my second deployment, I was injured and I was medically retired. So I was unable to finish my, career, what I thought was going to be my career. So I went back to IT sales back here in Nashville, and it was fine. I didn't love it, wasn't passionate about it, but on my second deployment, I started reading Rich Dad, Poor Dad. That obviously changed my mind and mindset. And, when I got back from that deployment, when I was injured, all I did was read books, go to Bigger Pockets and listen to podcasts, etc. So I really just, I knew I wanted to be my own boss when I was 10, 11 years old. I had really no idea what it was, probably until about 2012 on my second deployment. And it's like, real estate, I love it so much. There's just so much you can do with it. Literally almost anything that you do involves real estate. And, I love it.
Yeah. And the good thing about it is, in real estate, regardless of what part of real estate you are involved with, right? You find a freedom of time. That's what I like. It's not like 9 to 5, okay, unless you are, a worker or a construction worker. But if you're an investor, if you're managing or building properties, you have a freedom of time. That's the most important aspect of it. Yeah. So in the real estate, as you mentioned, right, you got started in 2017 into real estate. What were your steps? Like, how did you get started? What was the first step you took to get started, to get educated, to connect with different peoples in the same segment where you were interested in?
Yeah, so the 2017 number is somewhat of a lie, because we lived in that home for 3+ years.
Okay.
Then we rented it out, right? So like,
All right.
I'm technically investing, but I didn't buy an investment property. So, but I will still answer your question. To get started and to learn more about real estate, what I did, and this was 11 years ago, I went on Reddit. I was big on Reddit at the time, and went to a real estate subreddit, and it's like, I'm interested in learning more, but where do I go? Like, what books? And a bunch of people said BP.com, or, and I was like, what the heck is that?
Yeah.
And so Bigger Pockets. I was like, wow, this is massive. And, I started listening to podcasts when it was in the double digits. Now they have 6 podcasts with probably over 1,000 episodes altogether. And so I just indulged anything I could learn. I learned, and while that was good, that was also very bad, because I didn't focus on something. Right. Number one, I didn't know all the different strategies, all the different types of real estate. I didn't know about multifamily syndication and the passive investing. So I just kept kind of bouncing around and really never stuck on anything. I did talk to people, but what I found is when I was talking to my sphere of influence and my friends, they didn't know more. They didn't know any more than I did about real estate. So I was really struggling, just trying to find someone to help, like a mentor, to just kind of coach me, show me the ropes and things like that. So took years later, but I found one in multifamily and jumped in about 3 years ago.
Awesome, man. That's great. You got to get started somewhere, right? You can be reading books and listening to podcasts all the time. You have to take a leap of faith. And as we mentioned earlier, right, you got started with multifamily investment mainly initially as, or maybe I would say raising capital, right, to fund multifamily deals.
Yeah. So the first 2 deals were passive investments. But then my first actual deal was helping to raise capital. I also knew a little bit about the area as well, because my sister used to live there in that area. And so I was able to help from both a little bit of the area knowledge and the influx of jobs that were coming in and location, and then also helping raise capital.
Awesome. And how did you get in touch with your partners along with whom you work, or buy these multifamily properties?
Yeah, that's something that it took me literally years to figure out, like, where to find these people. And funny enough, it's a multifamily syndication group, right? I didn't reinvent the wheel, didn't create my own meetup or anything like that, but I was finding people online that did it. I never reached out to them. And knowing what I know now, a lot of people in our business that are very helpful, very, have the abundance mindset. So what I should have done 8-10 years ago is reach out to people like you, Ted, to be like, hey, walk me through this. Like, do you mind? Because I was extremely hungry and eager to learn. I had the time, had the energy, didn't have the knowledge, didn't have the money, didn't have the experience. And so I just sat back and waited and tried to learn more, instead of taking action and going to someone to say, help me out, or I want to learn more. I want to know more. Huge mistake on my part, but I've gotten started. I'm much better at it now, asking for help, just because so many people are just so, they're very open and they like to share in this business.
Absolutely. I got started the same way. Yeah. Back in 2012. I just started working with one of now a good friend. Just worked for him for free for 6 months. Just followed him, what he does. He was mainly into construction. Just got so.
I want to jump in, because it's funny that you say that, because I have a podcast as well about real estate. One of my guests, I was talking to him a few months ago. Very, very nice guy. And I was telling him, I'm like, man, I struggle with this and this. And he goes, why don't you go and look for these types of people, these types of businesses, tell them you'll work for free. And, that way you guys build a relationship. They know you're smart. They know what you do. And, then it'll be a lot easier. And I was like, yeah, okay, whatever. But I did it. and I reached out to 5 businesses. Only one responded to me, but
Mhm.
that one that responded truly can be life-changing for me
Yeah.
and help me scale. And so I didn't take the leap of faith. I didn't take action. Anyway, that's old me. That's old Charlie.
Yeah. So, Charlie, with regards to raising capital, right? Let's take a little bit deep dive into this particular aspect of real estate. When you initially started to raise the capital, how did you find your investors?
Friends and family for sure.
Uh-huh.
Colleagues that I had worked with. And then also in the multifamily syndication group I'm in. That's how I initially found, I don't know, the first 100 or 150 or whatever that number was.
Mhm.
And what's funny and also sad about that is I was talking to someone actually about a year and a half ago, and she said because I struggled to raise capital on my first 2 deals,
It's
really.
first is always a struggle, right?
Yeah,
Because yeah, you don't have that much track record that you need to show to the investors.
yeah,
You're still building your strategies, your funnel, your marketing campaign. Everything is still
yeah.
yeah.
Since those first 2 deals, because the first 2 deals as general partners, those were very close in time together. I think we closed on those within 3 weeks of one another. So I didn't have the strategies that I have now. Now, about a year ago, or a year and a half ago, when I was talking to someone, she said, "So when people think of you, what do they think about?" And I was like, "Oh, I'm an underwriter." And she's like,
Mhm.
"Okay, so you're telling me that someone you went to high school with knows that you're a multifamily syndicator and your specialty is an underwriter." And I was like, "Nope, not at all." So I started being a lot more active on LinkedIn, Facebook, and social media, sharing with friends and family a lot more what I do.
Mhm.
Um, Wrote about 40 articles on our website, have a drip campaign of like 50 emails over 6 to 8 months. So
Okay.
someone gets added to my database, I add them. It's evergreen content, so I don't have to update it. I do go through it, every quarter or so, just to make sure that everything is still relevant, which it has been. But yeah, the big thing, Ted, excuse me, the big thing is uh, about a year ago, I also changed my mindset to say, I'm not trying to sell you to get in this deal just so I can raise some capital. I know how much of an impact this had on my life. Being able to passively invest. One of my friends has said that multiple times to me. I mean, literally text me every month saying, "Thank you so much." And that was years
Yeah.
ago she invested. And so now I changed my mindset to say, look, I'm not trying to get their capital so we can close on the deal. We're offering a fantastic opportunity that
Exactly.
99.9% of people have never heard about and will never hear about. So it is truly life-changing. And through, at least for me, and through those articles that I wrote, I like to educate my investors. I'm not trying to scam anyone, but no one's ever heard of this, right? And so I like to educate them on exactly what we look for, how we underwrite markets, what we like in markets and everything, all the benefits of real estate. So it's a long game, but I would much rather have them educated, knowing what they're getting into, um, proving we're doing a great job, and then they'll be my marketing team too. They'll go out and introduce us to people.
Absolutely. And your investors, right? How do you communicate on the regular basis? Like, is it monthly, quarterly? You mentioned you have your drip campaign. You send out contents to the investors. How frequently do you send them out?
Yeah, so on the deals that we own, and I'm a GP, we send out monthly emails to all of the investors, not just my investors, obviously, but all the investors. And then my specific investors, it does depend. Sometimes I talk to them weekly or monthly. I would say no more or quarterly, worst case. And some of these people, I'm able to see in-person events, just different gatherings. So it varies, but I would say quarterly or better.
Okay. And initially, when you got started, right, raising capital, uh, didn't it were you hesitant to ask for money? Like,
Yeah,
because
yeah,
I was initially when I got started, I was like, why? I never asked for money to anyone till date.
yeah.
So, and similarly, right? As you mentioned, like you had to change your mindset. It's not you're not asking money. You are offering a great opportunity, which will
Yeah.
be mutually beneficial to everyone.
Yeah. You know, it's funny because the first couple deals I sent out, I don't know, 2 or 3 emails, and that was it. I didn't call them, I didn't text them, you know, I didn't reach out to them on Facebook or LinkedIn. That was it, just a couple emails. And if I didn't hear from them, obviously they weren't interested. That's not the case at all. And when I was asking for money, you know, I did it so kind of behind my keyboard, right? It was just an email. It was so it was not personal whatsoever. And I think for me, that was a way to not face to face and, hey, Ted, we got this great deal. Are you interested in investing? You know, and then the other thing is people who, and I don't mean this mean, but they're uneducated with syndication. It's a pretty big investment. It's especially for people that don't know about it. I mean, you're talking 50,000 typically is like a minimum. You're not just asking for like, hey man, I need $500 for this deal. That's a lot of money for most people. And so it was hard.
Yeah. And if they don't know what they're investing in, they won't,
Right.
of course. So you're absolutely right. You know, you got to educate the investors, even they invested right now or not. Make sure people surrounding you in your network knows what you're doing and how you do it.
Right. Yeah. And that's what the emails are for. That's the podcast. That's what that's for. I love talking to people about this because it is something that actually works. It's not just a get rich quick. And in fact, you won't get rich quick going this
it's a long-term game. You know, you got to build trust and it takes years.
Yeah. But it's been good. And I love talking about it. And now I'm so much more confident because again, I'm not saying, hey, Ted, you know, we need 50 grand for this and you'll love it. You know, it's, hey, look, this is a life-changing opportunity. I took the leap of faith 3 years ago. I wish I did it 10, 15, 20 years ago, but it truly is life-changing, not just for me, but I could introduce you to 100 other people that feel the exact same way. Oh, by the way, here's all these educational emails, articles, got a podcast, you know, got stuff on Facebook, LinkedIn, and I've had so many people reach out to me. I'd say 40 people probably within the last 8 months, just from social media posts alone, that, you know, maybe they never like it, never comment on it, but they'll say, hey, I've been following you for the last year. Like, what do you do? And so it's a really, you know, it's not me going to you, Ted, and say, Ted, we need money, right? It's you coming to me and saying, hey, this is great. Like, what do you do? And so it's a lot easier, you know, air quotes, but sale to get money. It's just educating. I think that's just the big thing that I would say. If I had to say one word, education.
And as you mentioned, social media, right? Is there any particular social media platform that you prefer to put your all contents? Like,
I would say LinkedIn is my primary. I'm on Facebook. I don't post a lot on Facebook, but sometimes I do. And when I do, it's incredible. But yeah, I would say LinkedIn and Facebook primarily. I'm on a few of the others. I'm not super active. I need to be much more active on Instagram and I don't even know what else is out there. But
Twitter.
But
Maybe now
actually,
called X.
X and Threads. I think I'm on all of those, but I've only posted like a couple times each. So, but yeah, social media is huge, and whether you like it or don't like it, which I don't like social media personally, but it is the best tool that I've seen so far that gets the word out about what you do, how I do it, you know, what we do, how we do it. To a mass audience, and you know, then they can come to me and say, this is great, like I want to talk about it. I'm interested in learning more.
Awesome. Yeah, I also think LinkedIn is one of the best social media platform to build up network, you know, because in LinkedIn you got professional people, you know, you have a class over there. Social media, others, Facebook, Instagram, you don't know who are reaching out to.
Agree. I actually use LinkedIn primarily for investors, And I use Facebook more for partners because, what we do, Ted, it's not like we have these massive offices and corporations. It's usually just a couple people and, running deals and putting deals and teams together. So there's actually a lot of people on Facebook that are very active in the syndication space. But as far as investors, I primarily only use LinkedIn for that.
Okay, great. And how do you select your operators? If you can just brief us about, what are the things that you check while partnering with someone?
Yeah.
Like background check, what do you do?
Yeah, great question. And I think that's extremely important too, because anyone can say whatever they want on social media.
Yeah.
Anyone, and so what I like doing is if I don't personally know them, I'll do a lot of, maybe the wrong word, but kind of stalking on Facebook, LinkedIn, Google, just anything I can find out about them.
Yeah.
Now, what I will say though is I'm very picky and choosy with who I would invest with from a passive investment. They definitely need a track record. And the whole syndication team, not just that one person, but the whole team needs a track record, need to have some other deals in that area, similar properties. So, I don't want something that's a D class, but they already have an A class, because that's totally different.
Yeah.
Looking for a similar business plan, if that's value add, great. They need to have experience with value add. So look at the team first, then look at the market. Do I like the market? Yes or no. And I look for growing markets, bigger markets. I personally don't like rural markets and tertiary markets. And then I'll look at the actual deal, that property. I'll go and look at crime in that area. I'll look at comps in that area. Anyone can put whatever they want on underwriting, but what I want to do is at least make sure that what I am seeing today on apartments.com or whatever it is very similar to the numbers they put. Because I know pricing does fluctuate slightly, but if something says, if their underwriting says $1,500, but all the comps are saying $1,000, that's a huge red flag to me. And then I want to make sure, like I said, I want to make sure that they know that area, whether they have a deal in that area or maybe they sold a deal recently in that area. I want to make sure that they know what's going on in that area.
Yeah, that's true. And of course, track record for the operators, how many deals they have, full cycle, I would say, right? How many deal full cycle they have gone through. Because if they're just recently started, they might not have closed or sold any of the earlier properties that they might have bought. And you don't know how much IRR would be on those properties.
Yeah. Full cycle for sure.
Yeah.
And the only caveat with that would be if they did a cash out refinance instead of selling it.
Yeah.
I still consider that full cycle, even though they haven't sold it, because they had the capital event and things like that. But at the end of the day, Ted, I worked really hard for that money, and I don't want to just give it to someone just because they're awesome on social media or whatever. And I think we are in a very small community. So if I reached out to you and said, hey, do you know this person? Chances are you know them, or someone that knows them and has invested with them. And so I'll do that too. I'll make sure that after I've done my due diligence, that anyone I know that knows them can give me some feedback too.
Yeah. And the thing is, the word spreads fast. If there is anything negative about anyone, then you'll come to know instantly after you talk to a few people around you.
Right. Have they done capital calls? Have they foreclosed on a property? Did they hit, pretty, at least they don't have to hit their exact projections, but did they at least come close? What issues, what risk did they not mitigate that they should have mitigated? Things like that are questions that I ask.
So during your real estate career, right, have you encountered anything like major substantial problems, and how did you resolve it? Like anything that you would like to discuss?
I mean, fortunately, I have, whether single family or multifamily, I've never had a bad deal yet. I mean, it's probably going to happen. We do a ton of risk mitigation, every step we can. Eventually something will happen, unfortunately. I think it's always good to have multiple plans, right? Backup plans and backup plans to the backup plan, because nothing's going to go perfectly. Even in the best of times, you're always, the last several years, how the market's been so great, there's still going to be issues with the deal, with the partnerships. And so I think it's just really important to make sure that if you're investing passively with someone, if I give you money, Ted, to invest in this deal, I want to make sure that, number one, you start with a great plan. And number two, you have contingencies for everything that, a bunch of different issues. Fortunately, I've never had a major issue in one of my properties. We did struggle with one of the properties. Vacancy got pretty high at one point. It got up to 30% or almost 30% at one point.
Was it during the COVID or time or?
No, I wish I could say yes, but no, it was that. And then at the same time, interest rates went up. It was last year where, and so for a little bit, we were struggling. We were never underwater with it, never even a risk of foreclosure because we had a really good plan. But it was property management manager had left and we had a few, I think we had 5 or 6 over the course of 2 months, like some part-time and then a couple full-time and 2 of them left pretty quickly. So we did struggle there. But what was cool about our team, our core general partnership team is we all came together, we all buckled down, and instead of just saying like, oh, that deal's in trouble, whatever, we got these other deals. We all just came together as a team and said, okay, guys, this is what we have to do. And so we all pitched in more than, initially we thought we would, because it's a great asset and a great location. But so some of the stuff we did is went locally to local businesses, came up with ideas like parties, community parties, incentives for the new leasing managers and just different things like that, to get us back on track. And we're way above where we should be. I think we're at our 3-year goal, and we've only owned that property about 1.5 years. So it's doing well. We had a rough patch, but it's doing phenomenal now.
That's great. That's great, man. Hope it stays on the upward trajectory.
Yeah, it's doing. We're running and not looking back right now. It's doing very well.
Okay. So what is the best advice that you will give to anyone who wants to start raising capital?
Start raising capital. I mentioned the word education before.
Yeah.
Education, there's so many different ways to do it. I'm not saying do all of them to start with, but I think you should do all of them to be as best as you can at raising capital. First off, we talked about social media. I shouldn't only be on LinkedIn primarily and then Facebook a little bit. I should be on everything all the time, posting something every day or every other day, to get the word out. Definitely think education is key. That could be webinars, that could be in-person or virtual meetups, could be emails, could be case studies, could be little videos that you do, whatever that looks like. Education by far is the key. And then I would also say, let people know what you do. Don't be embarrassed. Don't be shy. I know sometimes real estate investors have a terrible stigma because people think of slumlords, not landlords or not investors. But, I truly think that what we do by improving apartment complexes improves the community, improves lives, and we also make money from it, right? Like we're not trying to shy away from that, but we truly, there's a lot of fulfillment in my life, in how I live, because we are making apartment communities better. So don't be shy about saying what you do. Practice in front of some friends and family. If you're brand new at this, go and say like, how does this sound? Or how does this sound? You want like an elevator pitch. And you're not going to be able to master all social media and education overnight. It's going to take a very long time, but
it's a step-by-step process.
Yep. Every step you take towards that is one step that you don't have to take again.
Right. And what about building the funnel? What is the best way to build the funnel?
Yeah, great question. On both Facebook and LinkedIn, I have I wrote an ebook It's like 28 pages, something like that. And it's a high level overview of what we do. I get into the weeds a little bit, but not too much. It have a bunch of common terms, that you and I would use all the time that someone has never heard before, probably, like cap rate and NOI. But that's one of the pieces that I use to build my funnel. So someone could go into my Facebook or LinkedIn profile, click that, and then it takes you to my website. If you fill out the information, you get the free ebook within a couple minutes, and then it automatically adds you to my CRM and my 50 email or so drip campaign. So that's one thing. Talked about social media a lot. I think just being on social media and putting maybe your story on like why you like it or how it impacted you is very important, because there's other people that are going to see that and it's going to resonate with them, and they may never like your post, they may never comment on it, but they'll probably reach out to you. I've had 40 people or so reach out to me. Very few of them from social media. Very few of them ever liked or commented on my post, but they all reached out after several posts and they're like, "Hey, I've been following what you're doing, and this is great. I need to know more."
They're like silent listeners, right? They just
Yep.
look back, what are you doing? And then something triggers in their mind and they'll call you.
Yeah. Yep. And if I wasn't posting on social media, they never would have reached out. They never would have known. Right. There's so much stuff going around. No one's going to be like, "Oh, I'm going to see what Charlie's doing because I worked with him 6 years ago and we've never talked." No one's going to do that. So you have to be present. You have to post and show up on that feed. And, people will reach out to you if your story resonates with them.
Absolutely. And talking about the CRM, right? What is your preferred CRM?
Yeah, I would say it depends what you want to do. I think in syndication, at least in multifamily syndication, a lot of people use Active Campaign. That's who I use. Before that, I used HubSpot. Before that, I used a spreadsheet. Spreadsheet was free, but then very limited. HubSpot was also free, but the free plan was limited. And then to move up to the next package, I think was $50, and it didn't have quite everything that I needed, and it had way more that I would never use. But Active Campaign has, perfect for drip campaigns and newsletters and so many different things. It's an awesome CRM.
Yeah, that's great. I also use Active Campaign, by the way.
Yeah, that's great.
That's good. Good to use. Yeah. That's
Yep.
good. All right. So Charlie, just keeping time in mind, we'll move on to the next last round of questions. You ready?
Sure. Yeah, let's do it.
All right. So what is the best book that you'll recommend to our listeners? The one that has a major impact in your life or on your business?
I want to say Rich Dad, Poor Dad, hands down, but I don't want to take the easy answer. Because I'm sure a lot of people will say that. Can't Hurt Me by David Goggins. He is a Navy SEAL, ultra marathon athlete. His book on mindset just blew me away. Tough guy, Navy SEAL, but he actually did SEAL training 3 times because first 2 he got hurt. And anyway, he's a phenomenal book, amazing book.
Maybe I'll just pick it up one day,
Yeah.
And so what is the best, not the best, but how would you like to give back to the world? Like, what is the best method that you implement?
Yeah, I would say 3 things. And one right now I'm doing, and that is just trying to get the word out about multifamily syndication, because I truly, truly feel that's just a phenomenal way to build and grow wealth. And you can do that from the passive side if you'd like. You could, do passive investing for a little bit, then go active, or you could go active. I just think that is a great way. Second way, my wife and I actually want to long-term open up 2 charities. The first charity would be like a food waste program. And instead of throwing food away, like from big stores, grocery stores, all that, donate that to local food banks or shelters, whatever that is.
Okay.
And then the third way would be the other charity. I'm very passionate about helping veterans. I struggle with PTSD, and obviously PTSD mental health is huge, especially, not only, but especially with veterans. And so I'd love to open up some type of charity where just, bring people with PTSD and mental health together. And because you're not alone, even though you feel that way sometimes, but just come together, talk, and build a community that way.
That's a great way, man. Yeah.
Thank you.
It always once you do these kind of work, right, it gives some kind of self-confidence or a pleasure, happiness that you have accomplished something without, I would say, expecting anything back from anyone.
Yeah. And I just love this business so much. Well, partly because I love real estate so much, but the impact that we can have is just so profound on so many different levels. Number one, with our family. Number two, our legacy, our generations, our future generations. And number three, just the community, both who we can help, and then the community at the apartment complex that we help build. I think we can truly have a big impact. And I also think it's our duty to give back and to help other people, because we didn't get here because we came up with this idea. We had a ton of people that helped us. Just want to give back as much as I can and help, love it.
Yeah, absolutely. So final question, Charlie. How can Decoding Cash Flow listeners get in touch with you?
Yeah, best way would be our website, hkigllc.com. My calendar's down there at the bottom. You can contact me on there. You can reach out to me on Facebook, LinkedIn, or you can listen to my podcast, Passive Investors Playbook, and hopefully we get Ted on there soon.
All right, I'll love to be there.
Awesome.
We'll schedule some time. All right, Charlie. Thanks a lot for being on the show. It was a pleasure talking to you.
Yeah. Hey, thank you so much for having me, Ted. It's been awesome talking to you and being one of your first guests. So I appreciate it.
All right. Thanks a lot. Thank you, man.
Thanks for listening to Decoding Cash Flow, brought to you by Aster Capital. If you found value in this episode, then please share it with someone who you think could benefit from it. And make sure to act on what you've learned. If you want Ted Patel to personally help you reach your goals, then feel free to set up a one-on-one call with him. Also, visit us at astercapital.com for more free resources. Content of this podcast is for informational purposes only. As always, please consult your own advisor before making any investment decisions or setting a course of action. Thanks again for joining us on this episode of Decoding Cash Flow, and we'll catch you in the next episode.